26 years of CNBC TV 18.
Stocks on Wall Street close with gains as the Fed cuts interest rates for the third time in a row by 25 basis points, bringing the federal funds rate to a range of 3.5 to 3.75%. The Dow Jones gains almost 500 points, while the S&P 500 briefly traded above its record closing high. Asian markets are trading higher following the Fed rate cut. The Gift Nifty is also indicating a gap up start after 3 days of selling. Crude oil prices settle higher after the US seized an oil tanker off the coast of Venezuela, sparking supply concerns. Gold prices rise after the Fed rate cut, while silver hits an all-time high again. The PFRDA has issued new investment rules for government sector pension schemes, allowing investments in gold and silver ETFs. The new framework also sees investment in constituent stocks on the Nifty 250 and the BSE 250. And Indigo has submitted a revised flight schedule to the DGCA as directed by the regulator. The airline has cut its guidance for the third quarter following recent flight disruptions. CEO Peter Elbers will appear before the DGCA panel today at 3 p.m. The penultimate trading day of the week and a very important one. You're watching Power Breakfast right here on CNBC TV 18 in the Mumbai News Centre. I'm Hormus Fatakia. Let's first start off with how the Asian markets are trading this morning, and largely in line with how the Wall Street gave them that handover from overnight. Hang Seng trading with gains of around 0.8%, so that's a good start for the Hang Seng. The Kospi also trading with gains of a similar quantum. The underperformance, though, is coming from Japan. The Nikkei is trading below the flat line, currently down by 0.25%, and the Shanghai Composite 2, which is trading absolutely at the flat line. Some inflation concerns are rising in China, and that is what has led to the underperformance yesterday, and that's spilling over into today's session as well. You take a look at how the Gift Nifty is showing up this morning, and after 3 days of relentless selling, we are likely to open 100 points higher. At least is that what the implied open is currently suggesting. But the big question is, we do open higher, but do we sustain at those higher levels? To set you up for today's trade and to answer that question exactly, our team of researchers is here with the trade setup, the stocks to watch, and of course the all-important F&O cues as well. First up, Vivek joins in to get all the market cues that you need to watch out for. Vivek, good morning.
Well, that's right, Hormas. Good morning. Finally, we are looking at a session where we actually seen quite a bit of a decent handover coming in from the global equity markets. All of the US markets, as you can see on your screen, ended higher just on the back of the fact that the Fed rate cut happened as per what the market was anticipating. Post that, we actually saw a rally across most commodities as well. Gold saw a significant rally, and along with that, silver continued its upward march towards lifetime high levels. Last evening, you also saw oil prices go up marginally, higher by close to 0.5%, and Brent now trading near the $62.2 a barrel mark. Indian markets, however, if you're looking at the kind of handover we got from yesterday, it was an extremely weak trading session. Post the brief rally we saw on Tuesday, market participants were hoping for some amount of follow-up buying, but that was not to be seen. In fact, post the mild start that we saw significant selling pressure emerged throughout the trading session. Advanced decline ratio progressively weakened during the course of the trading session. Now, what kept the market low? The entire EMS pack, names like Keynes, after the brief rally it saw on Tuesday, saw significant selling pressure. Dixon joined, and along with that, you also saw other names like PGL, etc., move lower in the session. The one stock that did stand out and will be in focus today as well will be Hindustan Zinc, seen as a silver proxy play. On the back of that, that particular stock did quite well in the session yesterday. In terms of events to watch, keep an eye out on the mutual fund data that will be released by AMFI today. IPOs, primary market activity remains quite strong. Nefrocare, day one, 12% subscription. Park Medi, 52% subscription. And when you're talking about some of the IPOs that closed yesterday, Corona Remedies, extremely strong subscription, over 137 times oversubscribed. Wakefield subscribed by over 2.5 times. Asian markets, Gift Nifty, all indicating a gap of start, and markets will be hoping that sustains through the trading session today.
Vivek, thank you for that update there. Over to Ria with the stocks that should be on your radar today. Ria, good morning.
Well, good morning. Let's start off with Cipla first. They are going to distribute a drug called Yerpeak in India after an approval from the DGCI. Now, this Yerpeak drug is used for the treatment of obesity as well as type 2 diabetes. Moving on to Doc, they have entered into an MOU with the Brazilian Navy as well as the Indian Navy for the maintenance of Scorpion submarines and other military ships as well. Prestige Estates has completed the acquisition of 66.93% stake in Bharat Nagar Buildcon for roughly 939 crores. Adani Enterprises, the rights issue worth roughly 25,000 crores has closed with 108% oversubscription. For Petronet LNG, they have signed a loan agreement to borrow a secured rupee term loan of roughly 12,000 crores, and they are going to borrow this amount from a consortium of SBI as well as Bank of Baroda. Lloyds Metal will be in focus since its arm, Lloyds Global Resources, is going to acquire roughly 50% stake in Nexus Holdco for up to $55 million. And lastly, Tata Steel will be in focus after announcing a bunch of capex announcements. They are going to they have approved the 4.8 MTPA capacity expansion at the Neelachal Ispat Nigam. They've also approved a plan to set up a 0.7 MTPA hot rolled pickling and galvanizing line at the existing cold rolling complex in Tarapur. And lastly, the board has also approved the acquisition of 50% stake in Triveni Pellets for roughly 636 crores.
Riya, thank you for that update there. And lastly, Sudarshan joins in with cues from the FNO space. Sudarshan, good morning. We were supposed to hold 25,800. That didn't happen. But at least the Gift Nifty is indicating we'll open above those levels.
Good morning, Harma. So you have raised such a pertinent question that, okay, it's fine that Gift Nifty is indicating a start with a gain of more than 100 points. The question is, will we be able to sustain the level that we opened at? That's the difficult question, because the FNO data is indicating that now the range for Nifty has gone down, lower side, on the downside. It will start from 25,500, and on the upside range is 26,000. Because on the put side also we have seen major activities in two options, 25,750, and the second option, which was the most active one, was 25,500. So if Nifty fails to hold the levels around 25,750, the next support comes around only 25,500. As far as the flows are concerned, we saw interesting data coming from FIs. What they have done, they have sold in futures and they have bought in the options. So in the index future, they have sold more than 1,100 crore. In the stock future, they have sold almost 800 crore. But in the index options, they bought more than 2,400 crore. In the Bank Nifty options also, they have done some buying. Now FI longs exposure remains around 11%. On the short side, the exposure remains around 89%. On the short side, they have added more than 6,300 contracts. And as far as long side is concerned, they have added just 520 contracts. Now, on the options data, 26,000 and 25,900 call have seen a healthy increase, like big increase in the open interest in the range of 50 lakh shares to 53 lakh shares. And at the same time, premium has fallen for both these call options. On the put side, 25,500, 25,750. For both these options, premium has seen an increase. Now support 25,700, that is also 50-day moving average, and 25,500. Next support comes around, resistance 26,000. For Nifty Bank, support would be 58,850 and resistance will be 59,400. That's the yesterday's intraday high. Two stocks remain in the bank, Sammaan Capital and Bandhan Bank. Some of the stocks that have seen fresh longs from insurance space, ICICI Prudential, after giving a healthy set of numbers for the month of November, it has been seeing fresh longs. And another one is Siemens. Two stocks have been seeing fresh shorts, Mazagon Dock and KFin Technologies.
Interesting names there, Sudarshan. Thank you for that update. Take a short break. On the other side, all the details from the Fed's interest rate decision and the impact on Wall Street. Stay tuned.
"26 years of CNBC TV 18. "26 years of CNBC TV 18.
Welcome back. Onto the big overnight decision. In a widely anticipated move, the US Federal Reserve cut its interest rates by 25 basis points in its final meeting of the year. CNBC's Steve Leisman has more on the decision and the outlook for 2026.
The Federal Reserve reducing interest rates by an expected quarter point to a new range of 3.5 to 3.75. There were 3 dissents. The first time that's happened since September 2019. 2 were against the cut, including Chicago Fed President Austin Goolsbee, along with Kansas City Fed President Jeff Smith, his second dissent in a row. Also, another dissent for a 50 basis point cut from new Fed governor on loan from the administration, Stephen Myron. To recap, the vote was 9 for cutting a quarter, 2 against cutting, 1 for cutting 50 basis points. The Fed signaled a higher bar for the next cut, using language that it's used in the past to do so, saying that it will assess incoming data to determine the extent and timing of future rate moves. That language it used it last December to signal a pause. The rate outlook suggests consensus for just 1 more cut next year and 1 more in 2027. But as I'll get to when I talk about the dot plot, a lot of disagreement. Before the dot plot, though, I want to talk about some pretty big news when it comes to the balance sheet. The committee making a determination, it is now at what it calls an ample level of reserves. So it plans to initiate purchases of shorter-term treasuries on an ongoing basis. And then a separate document was specific, saying the Fed will begin buying $40 billion in bills starting December 12th. That's just a couple days from now. And I believe that's sooner than the market expected. And those purchases will go on for a little while at an elevated level because of seasonal demands for reserves that are out there before coming down again in April. That's what the document says. Outlook on the economy in the statement. GDP outlook was stronger next year in the Fed's own forecast, up 0.5 point to 2.4%. So pretty big move there in the outlook for GDP next year. The inflation outlook lower for next year by just a tick, down to 2.5%, just about hitting the target of 2.1 in 2027. The statement says the economy is expanding at a moderate pace. Job gains have slowed and unemployment has edged up. Just a note, the statement no longer says that the unemployment rate is low at the current rate. Inflation is seen as somewhat elevated. Economic uncertainty also elevated.
Let's now also listen in to Fed Chair Jerome Powell, who addressed the media after the rate decision.
The adjustments since September bring our policy within a broad range of estimates of neutral. And as we noted in our statement today, we are well positioned to determine the extent and timing of additional adjustments based on the incoming data, the evolving outlook, and the balance of risks. That new language points out that we'll carefully evaluate that incoming data. And also, I would note that having reduced our policy rate by 75 basis points since September and 175 basis points since last September, the Fed funds rate is now within a broad range of estimates of its neutral value, and we are well positioned to wait to see how the economy evolves. So it's really tariffs that's causing most of the inflation overshoot. And we do think of those as likely to, in the current situation, as likely to be a one-time price increase. Our job is to make sure that it is, and we will do that job. But right now, you've got this difficult balance, and there are risks to both sides. There's no risk-free path. If it was just inflation and the labor market was just really strong, and then rates would be higher, as they were for more than a year. We didn't have to worry about inflation. Sorry about the labor market. Because the labor market, unemployment was very low, if you remember, when inflation was very high. There was a labor shortage, so we could focus entirely on inflation. Now it's different. We actually have risks to both, and I think we're doing the best we can for people.
Let's now listen to what experts had to say on the Fed rate cut.
Was on board with the 2 cuts they've done this year. Frankly, the risk of a deterioration in the labor market, we're not there now. We don't see signs of it right now, but we've seen a lot of slowing in job creation. The unemployment rate has moved up for 3 consecutive months through September. That is exactly the kind of dynamic we do not want to see keep going and building. And so what the Fed is doing is they're taking out some insurance and trying to really buffer the labor market so that we don't end up in a recession. There is no reason, inflation is elevated, but there is no reason to stand by and let a recession take hold.
And some of the speeches that we saw after the last Fed meeting, which actually convinced markets they weren't going to cut today, because some of particularly the regional bank presidents, are really hesitant to cut, at least in what they say. But then when it comes to it, they give the kid another cookie. And actually, it's a slightly bigger cookie than expected because they got this extra liquidity for the short end. But I do think this is more dovish short term, but still pretty hawkish long term, because if Steve's reading of this is right, they've upped their estimate of GDP growth next year by a lot. We've got all these income tax refunds that are going to kick in the first half of next year. That's going to push growth higher, regardless of what the jobs market is doing right now. And it sounds like there are very few members of the Federal Open Market Committee who want to do more than one rate cut next year. And if you're only going to do one rate cut in the year, when are you going to do it? Maybe you wait all the way until December. So we're going to have it's going to be interesting here with the Fed perhaps going on pause in the first half of next year.
Wage rates have gone from sort of low fours to call it 3% on an hourly basis in the U.S. And I think that softening of the labor market, given the Fed's dual mandate, will help them cut rates. I'd also say on the rental housing front, which is a big component of CPI, the data lags, and what we see in our portfolio is much lower inflation there as well. So I think the overall picture is pretty good resilience, some softening on the consumer side, a bit of weakness on the labor side, some slower inflation numbers. That should allow the Fed to cut rates. That's good for the economy.
Reacted positively to the Fed rate cut announcements. The Dow Jones ended over 500 points higher. The S&P 500 closed almost at its record closing highs and very close to its intraday record as well of 69.20. The Nasdaq, though, underperformed and ended only 0.3% higher. The futures today are underperforming, of course, after the Oracle results. Getting you the latest on the Trump-related developments, Vinny is here in our special segment, Trump Watch. Vinny, good morning.
Hi, good morning, Hormaz. Thanks for that. Now, let's start with the latest update that we have coming in. Now, Trump again took an aim at the Federal Reserve Chair, Jerome Powell, calling him a stiff and criticized a pace of interest rate cuts that he's taken. Trump suggested that Fed's rate reduction was far too modest and could have and should have been doubled. Listen in.
Interest rates are going down, except with him, not too much. He did a rather, I would say, a rather small number that could have been doubled, at least doubled. You know, I've wanted to say it. I do say it. I believe it. And we have to get a mindset that when a country's doing well, you don't want to kill the growth. That's what they're doing. They kill the growth. I don't know if you guys even agree with that. They kill the growth because they're so afraid of inflation. But you can have tremendous growth without inflation. Everything goes up with the growth. But that's not inflation. So I think we can do much better than traditional numbers.
Also, President Trump announced a bold new immigration initiative called the Trump Gold Card. Now, according to his Truth Social post, this program promises a direct path to citizenship for all qualified and vetted people. Trump touted the Gold Card as a game changer, aiming to help American companies retain their most valuable talent. Now, the official site of the program was set go live just 30 minutes after his announcement. Meanwhile, in other news on foreign affairs, Trump revealed that he recently met with Ukrainian President Volodymyr Zelensky as well as European leaders. Now, their discussions, Trump said, involved pretty strong words on Ukraine's ongoing conflict. He questioned Ukraine's readiness for election, pointing out that the country hasn't held elections in a very long time and that a large majority of Ukrainians, around 82%, are reportedly eager for a peace agreement due to the heavy losses. Now, Trump also urged Zelensky may need to be realistic about the situation, emphasizing the desire of Ukrainian people to end the conflict. And in the final update that we have for you all today, also commenting on the Warner Brothers as well as Netflix deal, he said that he will oppose a Warner Brothers Discovery Inc. deal that doesn't include new ownership of CNN. Trump said during a meeting with business leaders at the White House that I think any deal should be guaranteed and certain that CNN is a part of it or sold separately as well. So that's all we have in today's edition of Trump Watch.
Vinny, thank you for all of those updates there. Take a short break. All the cues from the commodities market on the other side.
"26 years of CNBC TV 18. "26 years of CNBC TV 18.
Welcome back. Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. What's on your radar today?
Well, I'll start with the crude oil prices because that seems to be extending gains right now. The U.S. has intercepted a sanctioned tanker near Venezuela. Ukraine yet again has struck a shadow fleet tanker tied to Russia's oil trade. And then markets also have seen the U.S. crude inventories decline by 1.8 million barrels in the previous week. So all factors really supporting the crude oil prices, which is holding around 62.5 for the Brent prices there. But the real gains overnight after the U.S. Fed meeting came in yet again for the precious metal prices. You had silver extending record prices, making a new all-time high at 61.85. The U.S. has cut rates by expected 25 basis points, but it also continues to be the ETF inflows, very strong spot buying that has continued in Asia. The lease rates and borrowing costs for physical silver also have continued much on the higher side. Not just silver, the gold price is also firmed up back again above $4,200 an ounce. While the Fed cut interest rates was another divided vote, but the markets are allocating a near 80% probability of 2 to 3 more rate cuts in 2026, and that is supportive for precious metals.
Manisha, thank you for all of those updates there. Take your leave on this edition of Power Breakfast from me and the team. Thank you for watching. Bazaar Morning Call on the other side to set you up for the penultimate trading day this week.
"26 years of CNBC TV 18.